Well, I mean, there is no easy resolution to the problems in Russia, but I think three issues are relevant from a macroeconomic perspective. First of all, on sanctions, the protests have been very clear, not calling for broad sanctions. They want quite targeted sanctions, and the macro implications of that, I think, would be more limited. They're quite worried that there would be, if there's broader economic implications, it would be bad for the protest movement. Second, on fiscal policy, the last time there was major protests in 2011, 2012, the authorities responded with a big fiscal easing, and they definitely have room to do that now. So we think there's scope, potentially for a fiscal easing. And third, for Russian assets, there's a lot of risk premium already priced into Russian assets. The ruble, in particular, on our estimates, is undervalued by around, by more than 10%. So, for us is that we think there are prospects going forward. Certainly there are risks going forward from these ongoing prospects, or from ongoing protests, and the implications of that and the risk of sanctions. But actually we think there's a lot of value in Russian assets, in the ruble in particular.
Well, we were just looking at the price of oil, and we have seen a big bounce in where the price of the spot price of oil is actually trading. And some of that is underpinned by the outlook for the year, potential pickup in demand, good compliance from OPEC+. I just wonder to what extent the oil price here can give the Putin government some cover to enact a bigger fiscal response. You mentioned that. It's simply because of where the price of oil is trading, if need be, to quell some of the protesters' demands.
Yeah, I mean, it's a great point. I mean, within the budget, Russia's budget, they have assumed an oil price of $43 a barrel. Obviously, we're trading well in excess of that. So they have lots of scope for additional fiscal easing. And actually we think that they can, that can bring a big boost to the economy in a way that wouldn't put fiscal finances under threat. And I think it's important, given the rise in oil price we have seen, typically Russian assets would trade, would be performing better than they currently are. And this comes back to the point about the significant risk premia that are already embedded into a lot of Russian assets. So, if that sanctions risk fades, or if it, diminishes in any way over time, we think Russian assets and the ruble in particular could do quite well.